2 years ago, almost to the day, I recorded my most popular video ever, why you shouldn't invest in physical gold and silver. And since that video was released, it has been watched by over 350,000 people and has received more than 5,000 likes and comments. And in those comments, I see a countless number of misrepresentations all the time, a whole bunch of lies about why you should invest in gold and silver. And in today's video, I want to debunk all of those myths. And just so you know, I have no horse in this race. I have no reason to tell you that you should be investing in gold or shouldn't be investing in gold, other than I just want you to make sure that you have the information you need in order to make an informed decision. So make this part of your research, invest in what you like, but know that sometimes things that you're told aren't necessarily true. So these are the 5 lies you've been told about investing in gold and silver that are simply not the truth. But before I get into them, my name is Nolan Matthias, and if you want to thrive financially, this is the place for you. So go ahead, click that subscribe button and hit that like button so more people like you can see this video. Okay, so first and foremost, I have bought gold and silver. My parents have bought gold and silver, and my grandparents have bought gold and silver. We've done so because we thought it was the right thing to do. It was a good hedge against inflation, and in almost every single case, we found that we left a lot of opportunity on the table by investing in those physical metals, primarily because we could have invested our money in other things and done significantly better. And you can learn all the details about that in my video about why you shouldn't invest in gold and silver, which I will link at the end of this video. But one of the things I've noticed about my investing in gold and silver video is that there's comments almost on an hourly basis that are full of misrepresentations about what it really means to invest in gold and silver. And I want to put a lot of these to rest. So let's talk about the 5 major lies that are told about investing in gold and silver. So first and foremost, let's start with the fact that people say it is not an investment. And this is simply not true. They'll say it is actually a hedge against inflation or a store of value. But if you take a look at what the definition of an investment is, you will quickly understand that gold and silver is absolutely an investment. So let's take a quick look here at what the definition of an investment actually is. An investment is the act of putting money, effort, time, etc. into something to make a profit or get an advantage, or the money, effort, time, etc. used to do this. So in other words, if you are trying to get an advantage, it doesn't matter what you're putting your money into, that is considered an investment. So if you're putting money into gold and silver to try to hedge against inflation, to try to have a store of value over and above the dollar, then what you're doing is you are trying to get an advantage. And therefore, you are making an investment. So when you take a look at investments, you have to also look at what other investments would be comparable, what other investments might be safer or have a better return. And most people who are reasonable will look at gold versus other things, and they will see quite clearly that gold isn't something that is a very good investment, especially considering the fact that it pays no interest, no dividends, and is something that literally just sits there and that you hope somebody else will come along and pay a higher value for somewhere down the road. Now, I am in no way saying that gold and silver shouldn't be a part of your portfolio. However, it should be a small part of your portfolio and it should probably not exceed 5 to 10%. Plus, it is far easier to hold and far safer to hold if you're holding it in something like an ETF trust. Now, about the only thing that gold makes far more sense than is holding cash itself. And the reality here is that most people don't hold a significant amount of cash. And if they have cash, they tend to be smart enough to put it into investments. Things like Roth IRAs or 401ks if you're in the US, or TFSAs or RSPs if you're in Canada. Primarily because there are significant tax advantages to this. And again, because the investments that you can hold in these portfolios are typically more lucrative than gold itself. Now, the second big lie that people are told about owning physical gold and silver is that it outperforms stocks, that it's a better investment in stocks. And while for small periods of time this may be true, over the long run, it is most certainly not. So let's take a look at an actual gold and silver chart. And in this chart, what I've done is I've started by going back to the year 2000. And this is the chart that most gold and silver promoters will show you, showing you that gold is a significantly better investment than stocks and bonds and so on and so forth. However, there are a couple things you need to know about this chart. So first and foremost, here you can see gold and silver outperforming stocks and bonds if you go back to the year 2000. However, this is very much cherry picking certain dates and times. So if you go and you take a look at the last, let's call it 10 years, well, what you can see is that gold and silver underperform stocks and bonds. And what is happening here is in those years leading up to the financial crisis And just after the financial crisis, gold and silver very much did outperform stocks and bonds. This is because there was a lot of fear in the market, and subsequently a lot of people turned to gold and silver over other investments. But if you take out that 10-year period of time, what you can see is that gold and silver actually start to underperform. And in fact, if you go back over a longer period of time and you don't cherry pick a set of data that just has those 10 years in it, what you will see is that stocks and bonds almost always outperform gold and silver, except for very short periods of time where gold and silver perform very, very well. And if you go all the way back to 1900, you can see that there's a very obvious case to be made for the fact that gold and silver underperform stocks and bonds. Now, do they perform better than cash? Yes, slightly. Do they hedge against inflation? Yes, over the long term, absolutely. However, over the long term, if you were to invest in stocks and bonds, you would probably do significantly better than if you were investing in precious metals. And the other thing you have to keep in mind is that almost all investments eventually return to a mean. So in other words, while there are moments where gold and silver are going to perform well, they have overperformed for the last 20 years, which means they're likely to underperform for the foreseeable future, probably the next 10, 20 to 30 years, which means right now they may not make the best investment. So again, if you're adding them to a portfolio, that is one thing. However, if you're banking on gold and silver performing the same way they have over the last 2 decades, or particularly in that 2000 to 2010 date range, well, you're probably in for a rude awakening. Now, that leads to our third lie that people are told about investing in gold and silver, and that is that if you don't hold it, you don't own it. Well, if you hold it in an exchange-traded fund, which is a gold and silver trust, the likelihood of that money or that gold disappearing on you is very much slim to none. In fact, I can't think of any time over the last 100 years where an ETF has gone under and walked away with a whole bunch of people's money. Even in the 2008 financial crisis, we didn't see any ETFs going under, and the probability of an exchange-traded fund going under and all of your money disappearing is probably slim to none. And that old fallacy of if you don't hold it, you don't own it, well, that's probably just that, a fallacy. In fact, if you do hold it, there is a chance that if the government ever needed it, they could force you to bring it into the banks and sell it to them. And this has happened before in the US. In 1933, Franklin D. Roosevelt put out an executive order requiring anybody who held gold to bring it in and sell it to the federal government. So even if you do hold it and you believe that you own it, it could eventually become illegal for you to own it if the government decides that they need to take it back into their coffers, which would render it virtually useless for using as a currency. Which leads us into our next fallacy about gold and silver, and that is that it is used when currencies collapse as a currency. This is simply not true in most cases, and a lot of people point to Venezuela, which I will get to in a second. However, what is more likely to happen during a currency collapse is that a country will begin using other currencies as its method of payment. Take, for example, the Mexican currency crisis in 1994, where people just simply stopped using pesos and started using dollars instead. In fact, one of my first trips as a teenager was to Mexico, and I remember distinctly the shops and the restaurants not wanting to take Mexican pesos and requiring payment in either US or Canadian dollars. And the move towards other currencies is typically the move that most countries make, most citizens make when a currency collapses. And this includes Venezuela, because there is a fallacy out there that Venezuela uses gold and silver as their primary currency now that the currency has collapsed. However, this is only true for one region of Venezuela, and that is a small area to the southeast of the country where gold mining is one of the predominant industries. In fact, in most of the major cities in Venezuela, whether it's Caracas or other bigger cities, they're using other currencies as a means of paying for things. So in Caracas, for example, they have deviated towards the US dollar. In the western provinces of Venezuela, they use the Colombian peso, and in the south, where they border onto Brazil, they use the Brazilian real. And the use of physical gold or silver, where people are lopping off grams of gold, is actually only used in very small villages that are, like I said, mining villages. And then the last fallacy with respect to gold and silver and why you should own it is that central banks are starting to hoard it once again. And yes, there has been an influx recently of central banks buying gold. However, they aren't the central banks that you might think. They aren't places like the Canadian Central Bank or the American Central Bank. No, the central banks that are buying gold are in part the central banks that are having a harder time fighting inflation, but more often than not, they're actually the central banks that have trade ties to Russia. Because what gold is used for by central banks and by big countries is, one, to provide a backup to their currency. However, more importantly, it is a way of circumventing sanctions. And a lot of the countries that are buying up large amounts of gold are doing so that they can trade with Russia. Because obviously Russia has a significant amount of sanctions right now due to their war with Ukraine. And therefore, a lot of countries that trade with Russia and rely on Russia for things like staple goods and energy are having to use gold in order to make those trades. So this increase in the bullion boom is not so much to do with inflation, not so much to do with the risk of a currency collapse in the US dollar, but more often to do with the fact that countries are using gold to trade with a country that is being sanctioned. And on top of all this, last but not least, there is this fallacy that the US dollar is in jeopardy and that there's a high likelihood of its collapse. And this is just simply not true. All of the countries in the world, including China, including Russia, have a vested interest in the US dollar not collapsing. And therefore, any debt obligations will be renegotiated. There's simply just not going to be a time, anytime in the near future, where a major country says to the US, you missed your debt payment and we're going to force your currency into collapse, because it just isn't in the best interest of the world at large. And the likelihood of it happening, even though slim, if it were to happen, is 10, 15, 20 years out. There would have to be another currency emerge as a better alternative to the US dollar, and that does not happen overnight. It would take 10, 15, 20 years at minimum in order for that to happen. So as you can see, there's a lot of fallacies out there about buying gold and silver. I hope I've debunked these for you. And obviously use this as a piece of research. Go and look at the other opinions as well. But at least now, if you decide that you're going to invest in gold and silver, you can do so knowing that you have full information. Oh, and again, if you want to check out that video on why you shouldn't buy physical gold and silver, I'll link to it right here.